What's up YouTube? Welcome back to the channel, and in today's video we will be going over my monthly portfolio update for April. This month has been a roller coaster with the stock market crashing at the beginning of the month. After a 90-day pause on the tariffs was announced, it was started to see some recovery for the time being, but that could definitely change as it has in the past. With any recent news of anything related to tariffs, in my TFSA, we saw around 4.5% increase over the past week. So up around $1,000, so we're seeing some forward momentum going up, but still down 1.2 on the month. Some notable movers have been Uber, which saw around 7% increase. Hammond Power Solutions saw around a 10% increase. Rocket Lab with around 20% increase. We still are down 18% on that one. And Loblaw is also continuing to go very strong this month with 9% increase, and year to date they're actually doing very, very well. Up 17% in the last 3 months, so they've definitely been a good defensive stock for me with all these uncertainties going around. We are still seeing Amazon sticking below the $200 per share mark, as well as many other stocks sticking below recent highs. Some of which, like Bird, CNQ, CNR, has been down for much longer than just these tariffs. They're down for about a year now. But I plan on holding it long term, so I'm not really worried about it. Yeah, a lot of stuff down still, but we're starting to see recovery, which is nice. In my RRSP, we had that buy of VE get filled in late March after my last update video. Over the month, it crashed along with everything else, but starting to see recovery, and now we're pretty much flat on it all time. In the past week, the account is up around 3.6%. So also seeing some upward momentum, but on the month we're still down around 3%. Going over the buys and dividends this month, we'll start with the buys. We bought 3.1 shares of Amazon, lowering my average price from 191 to 188. Bought 1 share of VFE from 123.09 to 123.49. 1 share of CNQ, 42.64 to 42.45. 7 shares of Brookfield, 59.22 to 62.22. And then 5 shares of Uber, 67.39 to 68.74 average price. Some slight increases, some slight decreases this month. And dividends, we got 218 from Brookfield, 617 from CNR, 433 from EQB, 309 from Loblaws, 1519 from VFE between my RRSP and my TFSA, 134 from Hammond Manufacturing, 1432 from CNQ, 425 from BDY, 206 from ATD, and 399 from Bird. The total this month is 56.92, which is my biggest month of the year so far in dividends. I think in January I had 42 something. So another strong month for dividends. Next month will probably be pretty low, just with how the payout distributions line up. This month in the shop was a very, very good month for me. I finished the month with 236.1 hours at the pay period cutoff. So I anticipate for me to add 1,000 into both TFSA and RRSP accounts, which with those deposits I will reach my savings goal of getting to 30,000 that I set for myself at the start of the year. 1,400 of that is in my work RRSP employer matched accounts, so I won't be able, like, it's not on Wealthsimple, unfortunately. Which means I'll have to set a new goal for the year, which I'm very happy about. I'm thinking of setting it to probably 45 for the end of the year. Set a high bar, and then if I don't make it, oh well, but still fun to shoot for. My TFSA, I do plan on buying more shares of Bird, Hammond Power Solutions, Rocket Lab, and Canadian Natural Resources. In my RSP, I plan on adding some emerging market exposure to really fill out my total stock market reach. I know last video I said I was going to have it as like a 25% split between all four, but I kind of thought about it and it doesn't really make a ton of sense as emerging markets are very, like, they're slow growth and they're not as high potential as something like the US stock market, the Canadian stock market, and the developed Europe market. So I'm going to be doing more of a 30% split between US, Canada, and Europe, and then around 10% in emerging markets, which is pretty similar to like VEQT, but I wanted a little bit less exposure to US. Because in VEQT, it is around 45% US, 30% Canada, and then 17% developed, and then 7% emerging. So yeah, overall, I'm pretty happy with how much I'll be able to put away this month. I could put away more, but I also need to invest in some Snap-on tools, which sucks, but and it's a bit counterintuitive to take on tool truck debt, but over time these tools will pay for themselves plus some. And the main thing is it'll save me time and money, or save me time, which will make me money. And the quicker I am as a flat rate tech, just the more money I'll make. So yeah, that'll be it for today. With many of my stocks reporting earnings in the next 2 weeks, I'll probably be going over a couple earnings reports, but we'll see how busy I get. Thanks everyone for watching. Feel free to like and subscribe if you so please, and I'll see you in the next one.